Hello, traders. It's E from MarketWizards.com. Saturday afternoon, the 7th of October, around 2:30. Just doing a quick update, as I always do on the weekend. Take a look at charts, things I got right, things I missed, and I'm going to focus on yesterday because it was such an egregious day and one that really messes up a lot of traders. So let's do a quick review for myself and anybody that would like to take a look. As always, a reminder, use risk capital you can afford to lose. NFP is a brutal day for most traders to trade. Some traders don't like to trade at all. Others like to wait until the dust settles, make additional decisions. Personally, I like to let the first few minutes elapse, and because a lot of times you'll get caught in this is a 30-second bar, and to try to react in the first 30 seconds is nigh on impossible. So you look for areas to set up, and then look for some high odds logical type trades. So this is a 30-second chart with sigmas. Obviously, ahead of the open, we had a 55 target as T2, so we used that for support with a potential for 46 as a system pivot to also be support below that. And first identified idea of resistance was the 48. Needed to get it above that to start pressuring shorts and keep it above that. And I noted certain dynamics that looked to me like were important. So the first and most obvious to me was this 48, and then to the 60 to 80 area, and then to the 800 area, all which potentially, based on this 30-second chart, could get challenged. So that was my initial thought. Let it shake out. Normally do not advise the contra until we get at least 15 minutes to a half an hour behind us. And that was what I had posted to a few traders I was talking with, to let it settle out and then look for the bounce, because traders that had received good blessing or already pre-market, we're going to look to take their profits and capture those before the open. And this shows where I thought the cover pivot was at the open. These charts were out there. I posted these, and you can see the numbers and where they come from. So this was an important idea. This is our base support that I had posted. Need to get it above the opening pivot 26, which was the middle of this box. Nothing fancy about it, just my determination that this is going to be within 10 points of the prior day's low. So that's probably going to be an important pivot today. And then the potential to get up into that trigger. We can see this was a fast down, and typical of fast down moves, you can get fast up moves. So this would be a trigger, the midpoint of this box, to get back up and then get up into that 43.50 to 22, which was the overnight box that I thought was really important to define. And if it broke long side, and then I'd already figured that their target was to get up into that 60 to 65 test, and then into the 15. In early morning, those areas would potentially be covers to take some profits and then see which way it continues from there. As it turns out, we had that huge spike up. We came back. I had posted 703s, make sure you're paid. And then we get, after 10 o'clock, we get the bounce that starts in earnest. And obviously hindsight is so much easier to analyze, but still we'll try to look along with these dynamics. And I've already got commentary that I prepared that shows the sequence of events that I was recording with traders I was talking with, and kind of just kept the sequence running. So here's your 30-second breakout. And once we got above this, after the 10-20 time frame, we just started morphing up and squeezing traders. And this chart will show my belief that first we had to attack this 865 and then that 880, 882 area where we had just shown was a clear system pivot zone. And I thought that would be, the clue for the day. Can we get above that and stay there or not? And as always, you're going to look to take some partial profits. So as you approach that 900 to 905 area, 903, that was an important idea at the time for me to make sure you are paid. And then if we got some legs today, I thought for sure they were going to go attack 65. And I put that out early. Matter of fact, I thought even a day ago that was possible. So had to had to just wait for the right timing and the right news, and then the push. So I thought that was a done deal to take that out, and then some. I had also posted, not ruled out, this 15,053 and a quarter target. I thought that was the stupid target. Turns out that still wasn't the high of the day, and I realized at the time that was stupid. But if we don't get significant pullbacks, that was going to get taken out too, depending on how much the market pulled back. Once you get a pullback, it lets traders off the hook, and then it puts pressure on those that were trapped. So at that point in time, what you can see was still, around the noontime, I'm still already feeling that this has been a good trade, but this is now my support pivot. And obviously below that, the 922 that we had talked about. So traders looking for big trade keep getting squeezed in a day like yesterday, which does not come along that often, admittedly. That's why they are so difficult to trade. So here's that push. We can see timing wise into that 53. I'm using the 78 now as the resistance pivot, and all of these you can see move up, so that at this point in time, this is my big support box. This is my assumed support box here, and this is the box that needs to be negotiated right now with that 15,039 a quarter middle of this box. So now at this point in time, I am looking at this pole straight up, no relief, a squeeze type trade, and understanding that subsequent next boxes can be challenged as long as this box holds. Bottom this box holds, we take out the side, then we look for the next half, and then obviously the top. This was a chart that I'd put out, and I thought this area was an important area. This is a monthly side by side, and this is a 40% pullback. And so this is the way I'm reading that chart. Okay, support is in, we're up here, we're holding. So this is our support box. This is our current box that we are basis the previous month. We are now trading. And then this is our resistance box. And I'd point out this high right here where we had a change in character in the last significant high, this high becomes the target. And the boys always want to run stops if they can. And that was the point of this chart, showing that this was a potential target that needed to, if the longs wanted to establish control, would need to take out that 1350. And that obviously pretty close to this 18 target that we talked about. And that's a paid for sure target, in my opinion. And I posted some notes on the E-mini S&P target zone up here, the top box. We know that the bottom box is held. This is a double bottom in here. We rifled right through the directional pivot. This is a third time through trade, right? 1, 2, third time through. Boom, and this is going to go out, and it's a heat-seeking missile to knock out these traders right here, and then try to get up into this territory here. Primary target, the 43, 48, 75, and then obviously this high. This was the chart I also posted, and the point of this chart was to show that this is a double in here. Not sure if that shows. Let me guess. I can't quite get that in. Anyways, there's a double over here, and that's why this low is established right here, a double. I guess you can see that over here, what I was trying to point to right here. So this is a double. We've got a double. So I call this a double, right? You've got this support holding back here, 620. I think the low is 609. And that holds. We cannot break down into this box and stay here. We get above 735. That happened yesterday. We take out all these tails, and then we come up and we take out that 1593, 15.1 if you want to round it off. And this is on the yearly level with the print levels, not the high that was printed by this contract, but the previous highs. So this relationship is typical that we will get a two box move. So this is one box divided in half, and this is another divided in half. And that is typical in the market, according to theory, that we get pullbacks or even extensions in two boxes. So that is normal. So we've had a normal pullback here, and in my opinion, supportive resistance needs to be broken up here. And if so, then obviously up here to challenge this line. So we shall see in the coming week what happens, but this is a macro look, very important. And this is a Sigma chart. And this Sigma chart shows that we have gone from this yellow back down towards the yellow and the red support and pushed back to the green, came back through it, came back to the yellow and red, and now we are pushing back to challenge this blue line. And that will be very important test if we continue higher to see as this is hooking down, will that slow us down or not? And if we get through it, take out the high of this bar, then obviously up into this territory is next. So we're going to take it one step at a time, as we always do. And this is a very important macro look that I think a lot of traders missed, was that we've had consolidation, but then we had the breakout. And once we took off yesterday and took out that 922, I knew there was no coming back yesterday. It was just going to keep squeezing. Question was, how high would we get? And then would we get consolidation? And it turns out it just kept squeezing until the cows came home. This was a gap that I had posted. I keep track of gaps. Very important chart for me at the time. I already know how many points there are for this particular day, previous day. I know my third time through breakout. So now we're up here into this territory that has never been filled. So now we've got some filling of these, and this gap was the primary target. Try to get up there, close that gap, and then anything above that, obviously good fortune. And if we go back to the chart that we started with, we can see the pivots, closing pivot, I thought would be this 117 area. If we look at the dynamics of these charts, we can see how all of this fits together. Even though it doesn't seem probable, we can see the sequence trades that come about, and where supports that were at one point resistance have turned into support, and then the continued jog. And at the time this was posted, we had not yet taken out this 156 to 160 target, but I saw the dynamics of that as possible just based on a math idea from the low of the day and a 500-point trade. I said, well, that's doable. It's not like you want to be initiating new longs up here, but for sure, that's a possibility that we could do that, even though it's a low probability. So the later in the day and the higher the price, really the better the odds for a short trade, as these traders want to cash in on what they did all day long. And typically that's a very tough time to trade, admittedly. What we're doing is showing the analysis part. The execution part is equally challenging. But without this type of analysis, I wouldn't even know where to begin to determine how do you execute these trades. That's a story for another day. So currently, this is the format that we ended in. And I didn't do an updated chart, but we certainly know we ended back here at that 39 area. So that's going to be an important box to resolve right here, this box, before anything else happens. And at the end of the day, I had suggested I had the most I could see it coming back to was 03 to 97. And so use that for your support if you wanted to make sure you had, if you were in short, wanted to make sure you got paid. And anybody looking for a last scalp long would have to use that to leg up. And it turns out it was a nice little trade, a nice little pop, as shorts also took profits at the end of the day. So we have a lot of traders strapped, and until this low right here goes, uh, that's the support low, in my opinion, that nothing good will happen for the shorts until this low comes out. And this was a very tough swing back in here. And that's that 520 area that I said, I think this is going to be for retest failure or not. And that held. So that's a very important area, in my opinion, to hold, to continue the upward migration. And I certainly don't think this will continue without some type of a reversal that will come back and challenge some of these pivots. And typically this will be first. And once that breaks, then the dam opens to come back and do damage back here and retest some of these. And that may take 2 days, it may take 5 days, might take a week. Nobody knows, but we'll be looking for those dynamics to play out as the future unfolds. So I hope this helps you understand a little bit more about the way I like to analyze markets, and certainly welcome questions. And anybody'd like more information, contact me at eminywizard.com. Some traders have asked me to run a session. I haven't done so all year. So I've agreed to do that. If we can get enough people interested, I will do that. It helps me with my trading to, get out there and say things that I think are helpful for traders. Just easy to help 10 people or 20 people as it is to help 2. So if anybody's interested, look at the contact, hit this area right here, and there will be a form there. And just fill it out and let me know if you have any interest. And again, there's no pressure. That's just to give me an indication whether we have enough interest to run a room. If I do run one, it will not start next week. It will start the week after that. And we'll go for 4 weeks. So details on that to follow. Hopefully, you had yourself a good day. You stayed out of trouble. And I hope this, even if you didn't, I hope this little review will help you to understand days like yesterday that come out of nowhere. The most important thing is to have an uncle point and protect yourself. All right. Have a great weekend. Thanks for listening, and we'll talk soon.